Here's my best guess as to why Dave was able to be short SPY and just leave and go get lunch on Friday. So here's the context. Basically, this entire SPY rally here was very low volume. We've been talking about that a lot, but I'll recap through here. If you look at the average volume, nothing really gets above it at all. And this is the relative volume through here. We don't get over that zero line for this entire rally from mid-June all the way up to here. There is no real big volume. If you zoom out, look how much that has died down. It's just died off completely. So we know that this rally here doesn't have any real muscle behind it. It's basically just an absence of sellers. The sellers are holding off, call it a seller's boycott. The sellers are just waiting until they have more confirmation to sell. And they might as well just wait for things to get at a better price for them to sell as well. So we knew this thing was coming. On top of that, the OBV, the on balance volume, the buying versus selling volume, was in the shitter, right? So as SPY goes up and up and up, the OBV just stays low. That's called an OBV divergence, which once again confirms the seller's boycott. So we're waiting for the catalyst that will start the selling. We don't know when it's going to happen, but it's going to happen. And then, we get this nice little pop up through here, and this probably traps a couple people because it's going in for the gap fill. But there's no volume on that either, so you need to be super careful with that as well. So on Friday around 10 a.m., there's going to be some economic reports. There's going to be some Fed speak, etc. There's a whole lot of things that will confirm or basically let the algorithmic buy programs on the institutions pull the trigger on whatever direction they're going to go in. And you can see that happening right around through here, this chunk right through here. So this is 10:05. So this is when they start speaking, and then you get this massive volatility through here, right? So if you're looking at the 10p, huge 10p spike right through here, and no continued upward motion. You get the economic report, you get this massive drop, and you might be wondering, how big is this? This is really big. It's so big that the rest of the day you can't tell what's going on. It's a huge bear cross. So you get this engulf, but then that engulf through the volatility gets completely erased by big volume. This is big volume through here. And it breaks all the way down below this line through here. This could be like a little line of support coming up through there. So in the morning after that economic report, it just smashes all the way down, and we're already getting very big relative volume. Even if I go down to the 30-minute, right through there, right out the gate, we're getting that relative volume that we're not seeing all summer. Okay, so this is basically the kick-starting move. Then, as soon as we finish that bear cross and we get a bull cross, nothing really happens. It's very pathetic, right? So from essentially here onwards, they're on a clock. There's a clock to see some sort of retaliation against this type of move. And the longer that clock ticks, the less likely there is any firepower for this thing to fight back. So as we get, if you look really close, a couple bull crosses through here, we don't get any fight back whatsoever. The buyers are gone. There's no buyers. And so Dave says that he's short right around through here. So who knows when that happens? I'm assuming that as soon as this candle closes right through here, this candle, breaking this little tiny upward sloping trend line, there's no response from the buyers whatsoever through this stretch of time. That's way too long of a consolidation or a wait to wait for a bounce. You would see something a lot more aggressive right out the gate, something right about through there. And so, yeah, buyers aren't there. So this thing is just going to trickle down for the rest of the day, and this is the big flush we were waiting for. The sellers are here. They're going to continue keeping the pressure on. And so he just shorted here, and he just waited forever, right? Until the end of the day. You even get, near the end of the day, this amazing bull cross coming up through there and the opposite price action as well. So you can literally just short right into the close as well. This is selling on a much higher level. This is selling actually on a weekly level. So if you look at the weekly chart through here, this is the candle that reverses things. Look at that bearish hammer right through there. Look at the halfway point of this candle, and you can see right at that halfway point of this weekly candle, that's pretty much the high of Friday. It got rejected at that halfway point, further confirming that at a much larger macro timescale, like on the big picture side of things, we're starting to go back down again. That is why Dave was able to just set a short and walk away, because who knows, maybe he gets a little bit of fight back through there, but he can probably swing that short because of the overall macro theme.